Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Charles Rosenblatt, president of PayQuicker, a global payout platform. We're going to take a look at how the gig economy is helping to evolve payments. It is great to have you with us, Charles. Welcome to Trade Talks.
Hey, thanks, Jill, for having me. I appreciate the time.
You got it. And according to MasterCard, the number of global gig workers is expected to rise to 78 million in 2023. How will the payment needs of the growing gig economy shape payments trends?
Yeah, 78 million is a crazy number. And what's really more important about it is the diversity of that number. It's everyone from a 60-year-old woman who may be selling Tupperware to an 18-year-old who's YouTubing and making a lot of money. And so it's not one single payment need. And I think that's a big piece of it. But people want to get paid how they want to get paid, where they want to get paid, when they want to get paid. And so creating that optionality is really key for that sort of diverse market. And so when we have what we call beneficiary directed payments, where the end user gets to choose how they get paid, that's a major evolution than the market that's been there forever, where banks say, here's how you're getting paid, here's when you're getting paid, here's the way you're getting paid. By being able to get paid to card or e-wallets or crypto or check, believe it or not, it's amazing how that diversity allows the gig markets to exist. And I'll go a step further. You have an underbanked population globally, whether it's in a country like Colombia or even here in the United States. And the ability to give people cards or pay to those e-wallets, a Pix wallet in Brazil, allow members of society that weren't able to get jobs at these places because they couldn't get paid to grow. And so that 78 million is going to grow multiples on top of that, not only because people want their freedom, but because now payments is evolving to be able to pay them even if they weren't in a served market in the past.
Yeah, to your point, I have a 20-year-old door dashing right now until dinner time. So the number is quite extensive. What are the challenges businesses have in meeting the payments needs of this global workforce?
Well, cross-border payments are hard. And, Tom Hanks in A League of Their Own, one of my old favorite movies, maybe I'm dating myself by saying it, said, it's supposed to be hard. If it wasn't hard, everyone would do it, right? The hard is what makes it great. And I think that's essentially what the challenge of cross-border payments is going on, right? Businesses are struggling to meet the needs through one provider, through one source. They're having to piece together partners all around the globe. They're having to build departments themselves. There are some banks that have hundreds of people sitting in offices in Jersey City fixing wire transfers that went wrong, right? And all of a sudden, you have that combined with cost, combined with conversion rates, combined with time delays. And you have a major problem for corporations where their goal is to sell a product, right? Or their goal is to help someone DoorDash, like your son, right? And that if they have to worry about how people are getting paid, no one's going to DoorDash if they don't get paid when push comes to shove, right? They're doing it for the check and for the money, right? And so that's a big problem for these companies, and they're looking for a way to solve it with a sort of a single solution.
So how can the industry improve cross-border payments to democratize the flow of payments?
Yeah, I think you hit on a key word, which is democratizing it. I talked about it a little earlier, being able to help the underserved. And I think partnerships are key there. There are a lot of great companies who have a lot of really good solutions. The problem is inherently no single bank can solve it in and of themselves. So what's developing in the world and what's developing in the industry is the ability to tap into multiple people at lowest cost, at best-in-class pricing through single integrations. And that's going to take the burden off of these enterprises. Because all of a sudden, if I'll keep going to DoorDash because you mentioned it, if DoorDash wants to get dashers all around the globe, and they have to build a 500-person department to pay those people all around the globe, if you don't think they're going to take a bigger cut of the DoorDashers payment, you're crazy. So creating that efficiency for those groups and those will pass more money back to the gig worker when push comes to shove.
So let's talk about PayQuicker specifically. I've learned you offer Payouts OS, the first payments orchestration platform in the market intended to meet the needs of the gig economy. Tell us more how that platform works.
Sure. I'm really thrilled and proud that we sort of at PayQuicker created this phrase of payouts as a service and payouts orchestration. And so what it really means is and I'm going to get a little technical here, so I hope it's okay. It's a turnkey integration, a single API. It plugs into multiple banks and providers. It creates intelligent rails that can allow companies to choose based on the price of a payment, the speed of a payment, the funding currency they want to make in a payment, and allow for basically the quickest and most efficient and cost-effective way of sending money around the globe. It's an aggregation of all of these partners. So again, if you think about it, and it's happening in other industries. So a company like SoFi does a great job. They say, well, we can do investing on SoFi. You can do lending on SoFi. You can do banking on SoFi. They've aggregated it all in one place. Well, what we've done for the corporates through Payouts OS is aggregate their ability to pay anyone all around the globe with best-in-class pricing from multiple providers on the back end in order to sort of do that. It's, just to be clear, it's 200 countries, 40 plus currencies, partnering with people like a Barclays, a MasterCard, a Corpay, a Neem overall, in order to basically provide the best possible service, most importantly, in a single fashion. So groups that used to be 15 people in the treasury group can probably do it with half as many people because they only have to integrate technically to one place and then get everything they want in one fell swoop, so to speak.
Got it. And Charles, I want to wrap with a question that we asked the fintechs that join us on Trade Talks, because we do cover fintech extensively. The race to own the multi-billion-dollar cross payments markets is on, considering new fintechs and existing banks alike have introduced new solutions in the last year. So what will it take for companies to separate themselves in their offerings?
Yeah, I think there are three major things, if you ask me. One is trust. I'll use PayQuicker as an example. We've been around for 15 years. We serve millions of customers and have sent billions of dollars. While there are a lot of folks out there who are brand new, there's something to be said about having hardened your technology and hardened your software and had customers been doing this for 15 years, which isn't really common. The other I just hit on a second ago, it's tech. World-class tech overall. We believe we have it at PayQuicker. Others have amazing tech as well, but I think the tech and the ability to do things easily is key. And I'll hit a final point, because especially with all the layoffs that are going on in the industries today, there's a bit about convergence, right? So company resources are at a peak. Companies want to maximize their resources and their capabilities and the people who work for them to do the most efficient things that they can. And what I believe will wind up winning when push comes to shove is if you can go into to an enterprise and basically create that efficiency by allowing them to work with one party and cover the whole world in payments, you're going to actually do something which is helping them in a time where they may be struggling or they may need to represent costs.
All right, Charles, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.